John, good morning. Thank you. Merry Christmas. Hopefully everybody had a nice holidays. William, good morning. Phil, John, Fred, Ted, Lalit, Mark, Desi, William. Morning. I am using standing desk. Desi, thank you. All right. All right, then let's start. Let's see. All right, let's start. Welcome to Tradespoon in Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Also want to welcome new subscribers. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, let's review main concepts of trading psychology. One is dichotomy of control. Sorry, give me 1 second. Dichotomy of control basically saying that you only have control over your own thoughts and actions. And that's somewhere you want to concentrate your effort, right? Everybody's talking about next year, you know, is the market going to close at record highs? Is it going to close at S&P 4,000, 3,500, 3,000? And the idea that nobody really knows, right? People are kind of adjusting their views based on the current market conditions, but as market conditions change, then money managers usually adjust their views, right? They adjust whether the market is going to go higher or lower. So there's always element of uncertainty in the market, right? And especially in the last year and going into the next year, there are a lot of uncertainty in terms of interest rates and how long they're going to be elevated, when the inflation will subside. Nobody really knows that. So by definition, trying to say where the market is going to close, you can approximate, you can have an opinion, but you have to be flexible. Your opinion will change throughout the year. As long as you understand that, then it's okay to give an opinion on the market and, you know, invest based on that opinion. So main effort, from my perspective, should be concentrated on things that you do have control over. And the most important is, you know, cash. We talked about cash. I still think we're trading a bear market. I think that bear market is going to continue to the next year. I propose to have 50% of your portfolio in cash and 4 positions, no more, on average 4 positions at 2.5% account value per position of risk. Most common question, Vlad, what do I do with the rest of the cash, right? 4 positions, if I trade calls, and I just start trading, and I invest on $10,000 account and invest $250, 4 positions. Okay, I have $1,000 in my options. What do I do with the rest of the cash? My answer is that remember that options are derivatives of the stock, right? They are highly correlated. They are one-to-one correlated to the underlying asset classes. You should not think about option as investment of $250. You should take the contract and multiply by the strike price, and then to see what in 100, assuming it's a contract size of 100, and that will be how much equity you're trading. So if you're a stock trader and you have a 4 position, then 50% in cash is not a problem. But if you're an option trader, again, each position is derivative. And the idea that if the market is volatile and the market trades against you, you're limited to 10% of your account value drawdown. And we've seen multiple rallies, multiple sell-offs this year. It's reasonable to assume next year we're going to have multiple sell-offs, multiple bear rallies. The goal is not to have your account down more than 10%, right? Wait for 2 to 3 days to confirm the trend change. Wait till end of day to make trades. Do not sell naked options. Be aware of earnings days on your positions. Do not chase the trade. Avoid revenge trading. Avoid trading based on emotions. Look at the concentration. Do not call the bottom. Do not call the top, right? We were talking about building bottoms, building tops. Very important concept. We're going to continue doing that. If you look at the, let's see. Let's say spiders, right? If you look at the spiders, now you kind of can clearly see how market builds the top, right? This is the recent example. We had example in August. And sometimes it takes a couple of weeks, right? Sometimes it takes, a couple months, right? This was middle of November to middle of December. So 1 month, maybe 2 weeks. But you clearly see kind of, you draw a line through this box, and for 2 months, stock is not going anymore. So this is a perfect example of top, right? So, market is building the top. Right, and then at some point it breaks the neck, right? Breaks that bottom support. Or here, right? It breaks the bottom support, and then you know that the market is heading lower. So don't call the bottom, don't call the top. At this point, market broke through the 390. It's safe to say that the stop building process has ended. And now we have the top, right? We have 410, right? 410 is probably going to stay here for at least a few months, maybe a year. So I would say this is the top. As we approach the top, the idea is trend is down, so you sell into the strength. Market is a little bit oversold, right? We're sitting at this 380 support, 38% retracement from this high to this low, right? Previous 52-week low, previous high. We're sitting at the 38% retracement. Market is oversold. In classic example, it would go back to 390, right? And then as we approach as the earnings season start, assuming they are worse than expected, right? Then the market breaks through the support. So that's how I would, that's the example of top building and bottom building processes, right? And that's a very important concept in trading, right? Because in trading, everybody wants to say, where's the market going to end? Is it at 4,000? Is it at 390? Nobody knows, right? I mean, a lot of people doing ranges, 470 to 440, 440 to 410, 410 to 390, 390 to 360, 340. I mean, nobody knows, right, where the market is going to end of December. I mean, I think that's even silly to say, especially in the bear market, because people say it, not even people, this is a major financial institution, and then every quarter they adjust, right? So, but okay. But I mean, you need guidance, right? You, as a long-term investor, if you're a long-term investor and you don't adjust your positions every month, right? You adjust it every quarter. You do have to have at least some kind of guidelines for next year, right? And my guidelines, I would use 6 months forecast, right? If you want to know where the market ends 12 months from now, I see the lows around 316, 320, right? For the next 6 months, so let's assume market is going to find the bottom in the next 6 months. I mean, potentially can rebound back to 360, right? So I would say that probably 350 is where the year gonna end, right? But if the year is gonna end around 350 or 340, it has to get to 300, right, to rebound back to 350. So at 380, I definitely don't want to go long if I think that the market is going to end at 350, 360, right? If the market drops to 300, 320, okay, I think that's a good time to start buying, right? Aggressively, if you think we're going to end at 350, right? If you think we're going to end at 300, then maybe at 300 you don't buy, right? You want to buy at the discount. You want to buy at the discount. I think majority of research I have read so far, is calling around 400 next year, to end at 400 next year. Same thing, even if it's, let's say it's 400, right? Let's say, UBS thinks at 400. I think Morgan Stanley calls 380 end of the year. Great. That means at 380, you probably don't, if you're a long-term investor, you probably don't want to buy at 380, right? Because, I mean, you're going to get a much steeper discount. So this is important. Bottom process, top building process. Be flexible, right? All the money managers, they're flexible. They adjust their year-end target every quarter. As you get new information, it makes sense, right? It makes sense. We just need to be aware of that. Because a lot of time people say, well, you said end of the year is 360 and end of the year was 440. What happened? Well, things change, right? Jerome Powell comes out every month and he provides new information on the state of economy. So you have to adjust year-end targets. Okay. Any questions? So far, market is muted, right? Even though we're at 380 and market is extremely oversold, there is not a lot of movement. Again, we're kind of trading in the box, right? Now we have a new box. The question where it ends. We're December 28th. Today we have Thursday and Friday. End of the year could be volatile. We could break out of this box, probably, probably less likely, right? Unless something's happening. But then next year, as we're approaching the earnings season, right? As we're approaching the earnings season, this is when market volatility will pick up. I don't think we're going to break through the 390. I think the earnings season is going to be worse than expected. Well, analysts still have to adjust their revenue targets for the companies, revenue growth targets for all of the companies. The expectation we're still going to have upper single digits growth in S&P 500 companies. I don't think we'll be able to achieve them with the high interest rate environment and all the inflationary pressures. So I think earnings will be worse than expected. And if I'm right, then we're going to break to the downside. All right, so I still think this pattern of lower highs and lower lows is going to continue into March, and at some point we will break this level, probably sooner than later, right? it's either end of February or maybe maybe even retest in January, right? So whether it's in February, whether it's in middle of February, whether it's middle of March, I mean, that will depend on data, right? That will depend on data. But if you leave the things the way they are, and you just look at the this model for the next 6 months, we should, the way model says, if things the way they are, then probably we will break the bottom in February. Make new lows in February. Okay. So that's, I would say, a core scenario. Core scenario, sometime in January or February, we will break that 350 support. Meanwhile, for 10-day prediction, 380 support, 380. So narrow range, right? You can see the bands in which market is trading is getting narrow and negative trend. All right, any questions? Merry Christmas, John. March JPM puts and March TLT calls. That's it. Okay. All right. JP Morgan, let's review JP Morgan. That's his bought puts. Again, same thing. You look at the past 2 months. You look at the past 2 months, and basically, I mean, it's trading in at the support and actually broke through support several times. Right. So, I mean, it's you open up a Twitter and you open up, people are bullish on banks. I'm not sure why. It was the yield inversion. It's still 34, 26, 60 basis points yield inversion. So, but I think after the earnings seasons, in my opinion, it's down. There are some people that think it's going to be up. Not sure why. There is a theory divergence, right? Not a lot of people, but I think a lot of people are basically saying that the value stocks, just like we had it in October, December, that this pattern is going to continue, right? Where the value stocks at 52-week high, they're recession, they're better suited to withstand the recession. They're trading in low multiples, right? Ford is trading multiple of 5. JP Morgan is trading, at very low multiple. And because of this low multiple and it pays dividend, people just going to hang out in these value stocks, right? And there will be continued divergence where value stocks are going to continue making new highs and technology are going to get, obliterated, right? Like Apple is knocking on the door of 52-week low, right? Made new lows yesterday. And they were providing examples in 80s, 90s, with ETFs, and that most of the money I've been trading in ETFs, not in individual names. I still don't believe that Apple is going to be at 52-week low and JP Morgan is going to be at 52-week high. Yes, it can happen, divergence, right? We've seen this divergence in June, July, right? A lot of people ask me, what do you think is Apple? And I thought Apple's not going to diverge from QQQ, right? It's not going to make, almost 52-week high. But it did, right? Because there is an effect, Apple effect, there is a Tesla effect, right? Tesla effect. Tesla was almost at 52-week high in September. Not 52-week high, but at least at 52-week year-to-date, positive year-to-date, right? Tesla was positive year-to-date in September. So individual stocks can have divergence from overall market and ETF, and if you can spot it and you can trade it, great. I think this is just you trying to time it. You try to time the market. Very hard to time the market, right? And, I've been wrong on Apple, but eventually, and I've been wrong on Tesla, but eventually they do converge, right? Some kind of news comes out, Elon Musk bought Twitter, Apple sales are down, China closing, reopening, factories are, limited productions, now demand is faltering. So once the reality kicks in and it kind of sinks in into the news, then the stocks sell off. So for that reason, I think value stocks obviously are outperforming technology, high beta stocks, but that concept of multiple is a relative number, right? We're going to have earnings season starting in 2 weeks, and then we're going to have another earnings season in April. And, probably Deere and probably JP Morgan are going to make less money, right? Especially if we have a global recession. These global multi-industrial companies are going to have a hard time keeping up with sales expectations and revenue expectations. So that's my opinion. Maybe it's not the most popular opinion, but it's an opinion, and that's how I'm going to trade it. Meanwhile, again, dollar, right? This is a perfect example of bottom building process, right? We've been trading. We're trading the bottom, probably here, right? Or this below 200-day moving average. Pretty bad price pattern, but still, it's been a month. And we're trading a lower end, but we're not making new lows, right? We're not making new lows. We did break it here, right? I thought this 106 level will hold. A lot of people call 105 level. Okay, it's at 104 level. But, will it do this? Probably not. It could, but still, the point is, at some point, the opinion on the market is hinged upon the opinion on the dollar. If dollar is going to go lower, right? If dollar is going to continue lower, then soft landing, right? This is the definition of soft landing. If you believe, again, hard landing, then we're going the other way, right? We're going to go in the other way. So, and that's hard landing. Right, so I would watch the dollar. If the dollar rebounds, then market is going to sell off. If the dollar continues to drop, well, then the market is going to, then 52-week low is, that's the low, right? And that's also pretty popular opinion. It has been a pretty popular opinion that this is the bottom, that we will revisit the bottom, right? JP Morgan basically called that this is the bottom, right? Will we revisit when we get close? Yes. But, they called it here, right? When you were listening to JP Morgan analysts, they basically said that this is the bottom. We're not going to make new lows. Probably now that we dropped so much so quickly, I haven't heard the same analysts speak. I would assume they're not going to call this the bottom because it's just too close to the bottom, and Apple is sitting at 52-week low. And if market, I can't imagine the value stocks, going to go higher. Right, that Apple is, it's clearly, doesn't matter, it's kind of a classical charting, right? Technical analysis. If you look at this descending triangle, there's just a matter of time for Apple to break. So if Apple is going to go to 100, I can imagine that, JP Morgan is going to make all-time highs. That's not a likely scenario. All right. Any other questions? LMT. LMT, Lockheed Martin, right? $1.64 trillion have been approved by Congress for the budget next year. A lot of that money, 30% of U.S. budgets are going to aerospace and defense, right? Medicare is 30%, 30 or 40% is going to aerospace and defense. Budget has been significantly increased over the last year. I don't know exactly what the aerospace defense got last year versus this year. All I know, it's much bigger. Main beneficiary are the blue staples of U.S. or world aerospace defense, right? Lockheed Martin making the fighter jets, right? The famous fighter jets, F-series. We need more fighter jets, right? To sell to Taiwan, to sell potentially at some point. Well, definitely to Europe, and then NOC, right? Bombers, and multi-launch aerospace defense systems and surveillance systems. Norse, right? That's Norse Grumman. Charts are the same, they're divergent from overall market. These are examples of stocks. It's a different theme, right? It's a different thesis, right? It has nothing to do with recession, right? As long as countries are, the budget for the aerospace defense is increasing, these are the main beneficiary. You know, if they were decreasing, then, or if the war in Russia, Ukraine all of a sudden stopped, well, then yes, these stocks would drop. Thank you, Charles. Any other questions? Okay. Meanwhile, let's look at spiders. It's up 0.5%. Now the main trade is taxes, right? A lot of people lost a lot of money this year. So one way to write off your taxes, and you can consider the same thing. You know, if you lost money in XLK, and you know, you can close your XLK position, take the loss, and buy Apple, something that's highly correlated, right? If you lost money in TLT, you can close TLT and buy LQD, right? Or something that's very highly correlated. So then, you know, you can write off, use it on your taxes, the loss, but still participate in the trade. Cryptocurrency, right? Cryptocurrency, you can sell, you know, Bitcoin and buy Ethereum, right? And, you know, assuming they're going to trade, you know, in high correlation to each other. Give me 1 second. All right. Let's see any other questions. DASI TLT is right. It's ETF. It's basket of treasuries, right? Usually, I think 5-year and 10-year, 20-year, 10-year and 20-year treasuries. So it's a mixture of medium-term bonds, right? So, and you can see TLT is down. Back to the trend line. It broke through the downtrend line. So it's again built the bottom, broke through the bottom downtrend. It broke through this downtrend, broke through this key low point. Now back to the downtrend. You know, I think again, you know, maybe it will, you know. So, you know, back to the trend line. You know, core scenarios that would do something like this. Right, but this is bond prices, right? So it's up. It usually trades in opposite to the yield, right? 10-year yield is down, treasuries are up. Right? concerned that since everyone is focused on good job, it won't happen. I assume it's Mark. Sorry, it says trader. I'm going to assume it's Mark. My contrarian gut feeling is concerning me. 2023 bear drop is the most forecasted bear in history, for example. Sentiment says only 20% are bullish. Big bullish, So yes, all the sentiment is at historical lows. A lot of people forecasting, it is most anticipated drop, right? If you look at the history, there's only 4 or 5 occurrences throughout in the past 150 years where we have 2 down years, right? Where both years were negative returns in equity. So I don't have a strong opinion whether we're going to have a negative return 23 or a positive return. That's kind of just, it's going to depend on a lot of news. We can debate about this and argue about this, and that's a lot of articles in the news. Right? You open up a Twitter, we're going to have positive return, negative return. And, I mean, nobody knows, right? It's a flip of a coin. What more important is the kind of a short-term rebalancing, right? So everybody on this live trading room, we are short-term, medium-term traders. Short-term, yes, the sentiment is extremely negative, right? And every bear rally, ends up the same way. It was a sell-off. At some point, it will stop. I'm in the camp. Yes, it is a contrarian signal that everybody is bearish. So it is a good argument that if everybody is bearish, then the market is not gonna sell off as much. But being bearish, right, and acting bearish are 2 different things, right? Yes, everybody's bearish, but nobody's buying hedges, right? VIX is at 20, right? Historical average. With all the issues we have in the market, nobody buying S&P puts, right? VIX is at 20. So there is a dissonance, right? What's the right word? Dissonance or disconnect, right? There's a disconnect between what people think and what they do, right? Because DEER is still at 52-week high, right? So DEER is at 52-week high. Merck is, people, all these bear markets, there's always elevated volatility, and usually people don't hide in Merck, DEER, or I don't know, ExxonMobil, right? Right, that's not an example of a bear market or a recession. So there's a disconnect of what people, their sentiment of what they do. Yes, everybody's bearish, but everybody's buying ExxonMobil and Merck, right? So because of this disconnect, I think we need something like, we've seen in Tesla, right? It's everybody loves Tesla. Everybody has very high concentration in Tesla. You have a, back-to-back bad news, and then the market just falls off the cliff, right, on a very elevated volume. So this is a perfect example of what should probably happen to the market. A lot of people are arguing, well, it's Elon Musk, he killed the brand, he bought a Twitter. I think it's, when I used to work as a claims adjuster in federal government, when I finished college, I was claims adjuster in the federal government, and they were saying, when you give a diagnosis, to an employee, right? When the doctor gives a diagnosis, you have to classify it. Is this a direct cause, right? Is this precipitation, right? Precipitation. Is this aggravation, right? Or is this, it was the 4th one, is it trigger or precipitate, aggravate, and directly caused, or it was something like trigger or something like that. So a lot of people are under impression that, Elon Musk, purchase of Twitter is direct cause of, Tesla selling off, right? It's a direct cause. I don't think it's direct cause. I think it's more of a precipitation, right? Precipitation, right? Because I have biochemistry degree. Precipitation, right? You keep putting these some kind of particles into a solution. At some point, there's a precipitation, right? You start seeing precipitation in the liquid solution, right? It's kind of fallen on the ground, right? Is there an image of precipitation? Image of right, something like this, right? You have a solution, you keep putting the articles, and then boom, you start seeing precipitation and falling to the bottom of the flask. So that's Elon Musk, right? But it was just one of the particles to cause the precipitation. The main reason, you have this drop to the bottom of precipitation is not him selling the Twitter or buying Twitter. It would have happened anyway. It would just be, longer, right? So, so it's a good question about contrarian view, but usually there is a signs, right? No buyers, right? Indiscriminate selling, above, double the average in in volume, right? So I think Tesla is basically giving you signals what will happen to the rest of the market, like spiders in QQQ. Maybe it's not going to happen to ExxonMobil. Maybe it's not going to happen to JP Morgan. I don't know. But when there is a panic in the market and people get on margin calls, people sell off everything. So I think this is a good sign that you can argue that at 100, Tesla is going to start building the bottom, right? Maybe it's not going to be 100, maybe it's going to be 80 or 70, but this is a sign of capitulation, right? There's no buyers, indiscriminate selling, right? Above average volume. We don't have that anywhere else in the market, right? Tesla is kind of a first example. Even if you look at the charts of Microsoft, right? I mean, we have spikes in volume, but there's always buyers, right? There are buyers. So for that reason, I think there is just a little. Let's see. The word of the day will be dissonance. Lack of harmony among musical, an unusual degree of dissonance of such choral styles, right? So this is an example where there is a lack of harmony, right? And at some point there will be, the bears will come together, and so that is the most, I think, the $1 million question. Have we reached the bottom without this capitulation? And the answer is no. Maybe in Tesla we have, but not in the rest of the market. So for that reason, I cannot imagine that this is the bottom for Apple. And if this is not the bottom for Apple, and if Apple is going to, at least 100, right? If Apple is going to 100, well, it will pull the spiders, and spiders will pull JP Morgan, and spiders will pull Deere and ExxonMobil, and that at that point you're going to have these, something like this, right? We're missing something like this, right? That's a capitulation, right? March of 2020, large volume, multiple days, multiple weeks, right? Multiple weeks of large volume, precipitation. Okay, you're done. For now, we didn't have that. Pretty steady for the past 2 years, just kind of a pattern of lower highs, lower lows. But time will tell, right? Time will tell. But it's a good observation. Thank you. Please send some insight. UNG 24 hours. I mean, natural gas is driven by news, right? I mean, you can look at technical analysis. It's irrelevant. Well, it's not irrelevant. I mean, you can see it's a pretty bearish price pattern. Right? And it was so cold, and when I came back from Mexico, in Chicago, it was freezing, but the gas is down, right? It's in free fall. It's a supply and demand on news, right? When the headline news is that there's, millions of ships sitting in North Sea, and in Black Sea, and nobody wants that gas, right? Or the natural gas in the United States is below the war, the start of the war. It's just a supply and demand issue, right? So basically, there is more gas than people wanted, right? And especially when the recession in Germany, factories are being closing down. You just need less gas, right? So kind of buying the rumors, selling the news. So, I mean, for 24 hours, this is a very bearish price pattern, right? So if there's no news, it's going lower, right? It's going to 12. If there's some news that, all of a sudden, inventory has dropped, right? And the temperature in United States dropped, or, then it's going to go, opposite direction. If I looked at the temperature in Chicago, right, it's going high. I mean, let's see. Is it by? This is daily. Let's see. Where's the month? Where's the daily? Thursday, 51 degrees, right? Friday, 46, 53. What do you think is going to happen? I mean, Chicago is obviously just one city in the town, but I'm going to make an assumption it's going to be in same cyclone is going through the United States. Why don't I get these here? Right. So if the average temperature is going up, then 24-hour prediction for gas, it's going down, right? People see this chart of temperature and like, we were at -10 and now we're at +53, right? You have to love Chicago for such a diversity. But same thing happens in Florida. I know it was a record low temperature in Texas, in in Miami. It's the same curve, right? It's not the same absolute value, but relative curve is the same. Big drop in temperature, now the temperature is rising. Right, and I've read that the average price for gas in the United States is lower than it was in February when the war started. Right, that means that plenty of supply, lack of demand, and price drops. Opinion XOP 2.5% drop, probably the same thing, right? I don't know why. I mean, today's Wednesday, so inventory numbers. So every Wednesday there's inventory number. It's 9:06, right? I think they come out at 9 o'clock, right? Oil inventory numbers. I assume they're down. I mean, sorry, they're up. Oil inventory. Every Wednesday there's oil inventory numbers, right? No. Let's see. Let's look at news. See if we can make the sense out of them. XOP, let's do XUSO. I mean, you have to look up what were the inventory numbers. I don't have them. Let me see briefly. Let's look. Doesn't couldn't find the exact reason. Let's look at China. Maybe China dropped. It's supply and demand. China is down 2%, right? China is down 2%. That's probably one of the explanations. But the oil prices of the oil are driven by this opening closing theme in China, right? Zero COVID policy. So one day it's up 5%, one day it's down 2%. But main reason is supply and demand, right? Longer term supply, not weekly, but longer term supply. And you have this triple top, right? We talked about XOP, triple top, or double top, however you want to call it, right? And then you have this neckline. I think the passive list resistance is again to the downside and eventually breaking this level. Probably not that drastic, but something like this. If you believe in hard landing, then the main explanation is that we're just, global recession, and people going to start driving less, and companies going to fly less and transport less, and so demand is going down. Why it's down 3% today? I think it's because it's just volatile, right? You have China up 5%. They're the major, consumer of the oil. Now they're down 2%, so oil kind of fluctuates along with that trade. CNBC reported New England ran low of natural gas last weekend, so oil made up 30% of production. Not sure if that's the reason, but okay. Thank you, Ken. Thank you, Ted. All right. Not 9:10. Well, market is kind of not going too far or anywhere, right? It's kind of fluctuating. It's up. Now it's session low, session high. Now it's session low, but very narrow range. Looking for a catalyst. So in terms of news, let's see. Today is 28th. We have 2 sessions. Initial claims probably not going to be any catalyst. Chicago PMI, maybe short term can cause some uncertainty in the market. But this year I think is just main reason market would fluctuate up or down are taxes, right? Taxes, and kind of end of the quarter, end of the year rebalancing, which can spark some kind of volatility. So far, it's kind of muted reaction, right? We've been trading between 380 and 383 for the past couple of days. For the past, it's wrong chart. 1 hour. Been trading between 375 and 385, probably for a week. So your overhead resistance around 386, 387. Your support is around 375. Let's review positions. So I did add to the put, right? Yesterday I did add to 250 put QQQ. The reason was, I wanted my portfolio to be more bearish. It was beta of negative 0.5. Now it's closer to 1, negative 1, right? So if QQQ is down 1%, now my portfolio is up 1%. So I want to go into January, more bearish. So I added to this 250 put, right? So I have put spread. I'm actually trying to get to the call spread. Didn't get filled, but I want to be bearish. I think anywhere between +1 and -1, it depends on, you can be neutral, you can be bearish, you can be bullish, right? I think all of these are totally fine. Just depends on the view on the market. Me personally, I'm bearish. Market is down, QQQ is down 1%, my portfolio is up 1%. So that's how I'm trading right now. That's the reason to buy this. Or close to one, right? Amazon estimates probability of hard landing at 30%. Okay. Okay, thank you. All right. So let's review the positions, the rest of the positions. So Russell 2000 still have the bearish call spread and bearish put spread. So bearish on IWM, NOC, continue to trade around NOC, trades in at 544. QQQ closed the January bullish spread. So at this point, I just have 250 put, long put, and then I have spread, 280, 270 put spread. Do have SH. If you're not comfortable trading options, I do have SH, and then I do have XLF puts. So all the positions, either outright bearish or a spread, where I can be bullish and bearish, like QQQ put spread. If QQQ goes up, I can have a choice of closing the short put. Let's see what else. Let's see, and finally, let me look. Trade option, XLK. You look at XLK chart. Let's see if we can start doing. XLK is not going anywhere. Let's see, 125, 120. 125. Okay, so I can continue, start doing the XLK. We'll do 125 call. Kind of this option wheel, right? Market, I think, not going anywhere till Friday, so I'm going to sell 125 call. Get back to this trade. So again, 0.5%. The idea of collecting 0.5%, 125 call, and then I'm gonna buy. There are no events, right? Last time I got a sign because we had a CPI data. That's probably was not. Could have just waited, but I'll sell 125 call for 62 cents, and I'll buy 127 call as a hedge for 12 cents. Let's see, 12 cents. Okay. So yeah, the idea is to collect 0.5%. 0.5%, kind of same strategy as earnings, but use cash secured put, right? On the $10,000 account, I'm trading XLK. If you have $25,000, QQQ is more liquid, right? It trades in pennies. This bid and ask is wider. So on a larger account, I would trade QQQ. On a smaller account, or spiders, SPY, because this is all mainly technology names. I mean, there are some Visas of the world, but mainly this is a growth technology companies. All right, that's all I have for today, 9:18. Scott will do the closing bell, and I will see you tomorrow morning. Thank you very much, and have a great day. Desi, if you're not getting invites to the closing bell, click on chat now and talk to our support team. Ask them to re-add you. Sometimes, you know, you get unsubscribed from the list for whatever reason, right? I'm not sure why. But if you don't get email, open up a support ticket or go to chat and talk to our product specialist. Thank you, Phil, Desi. Thank you, everyone. Thank you very much, and have a great day.